In joyous times like this, where our Ghana cedis greatly appreciate against the US dollar, one of the most important questions a lot of individuals or investors tend to ask is, how do we consolidate these gains to our own benefit? You and I know that at the time where the Ghana cedis tend to depreciate each and every day, one of the things individuals tends to do was to convert their money in dollar or probably buy some dollar down, and when it further declines they will convert it and make some profit for themselves. In today's situation, we cannot go by that particular way, and one other thing a lot of people are actually worried about is the stability of this appreciation. One thing is about the appreciation because we've seen that over time, and another is the stability. A lot of people don't tend actually to have so much confidence in this particular appreciation, so they are worried as to whether this is just a camouflage or something that will be there for a longer period of time. So in today's video, I want us to take a look at some dynamics, and if you actually watch to this extent, I probably suggest that you have so much interest in this video, and that is why you stick to this extent. So please kindly subscribe as we get into it. So in today's video, we'll be looking at 3 things in order to greatly appreciate and know how we should be able to consolidate these gains to our own benefit. The first thing we'll be looking at is what at all is gold and how to invest, or the reasons why we should invest in gold. The second aspect of the video will be why is gold the best alternative for this cedi appreciation, and the third one is how to buy gold or how to invest in gold. So without further ado, let's get into it. So the first one is what at all is gold and the reasons why to invest in gold. So gold is one of the precious metals that comes with a whole lot of value. I know you and we know that it's one of the natural resources. Growing up, they would often tell us that gold, diamond, silver is some of the natural resources, and in order to find gold is very scarce, and due to its scarcity it's making it more valuable, where individuals and countries tend to have so much interest in this particular commodity. And some of the reasons why individuals or countries tend to have so much interest in this commodity is, one, it's one of the commodities that you can use to hedge your currency in terms of inflation. So at troubling times where countries tends to face so much inflation or rising of prices of goods and services, one of the things they tend to hedge this inflation is gold. And another reason why individuals and countries tend to have so much interest in gold is one of the assets that the price has continuously increased over time. If you take a look at the gold chart, you realize that almost every time or almost every point in time, the prices of gold tends to increase. It mostly appreciates. So due to this, countries and individuals tend to have so much interest in this particular commodity. And another reason a lot of countries or individuals tend to invest in this gold is because it has the potential of retaining its purchasing power. Gold is one of the commodities that has greatly retained its purchasing power over time, and due to this, gold is one of the commodities that individuals tend to invest or put their money in. Now let's get to the interesting part of this video, and that is why is gold the best alternative for our cedi appreciation. Let's take a look at the historical chart, and if you tend to look at this chart, you realize that greatly gold has continuously appreciated in price. Now let's take a step back and look at if we were to invest in gold in some time back. For instance, at the time where our Ghana cedis used to trade against the US dollar for 17 Ghana cedis, if you wanted to invest in gold, let's say with $100, at that time you'll be needing like 1,700 Ghana cedis. But today, where our Ghana cedis has appreciated to an extent where it's 10 Ghana cedis per dollar, you'll be needing only 1,000 Ghana cedis. So with this particular instance, we have already made a gain of 700 Ghana cedis. Now here's where it gets tricky, and here's where it's applicable. So now if you put your money in gold today, where you actually don't know the direction of the cedi now, because you are so much skeptical as to whether the cedi will go back to its original price of 17 Ghana cedis, or it will retain its value and maintain the stability at 10. So you are so much confused, you don't know the direction. So today, if you tend to place your money in gold today, you don't know the direction of the cedi, and later it go back to its original price as 17 Ghana cedis, then your $100 will tend to make an increment of 700 Ghana cedis, because it will be going back 2,700. With that, you've already made a gain of 700 Ghana cedis. But in case, let's say the dollar hit back to let's say 7, or further decline back to 8 or back to 5, so with this you'll be able to keep your $100 as in the value of the gold that you buy, but already at the back of your mind you know that the gold price already will increase over time, so you have nothing to lose. So whenever the price of gold tend to increase, even though the dollar has further declined, but with the mindset or with the appreciation of dollar at every point in time, or you tend to retain your original money because of its appreciation, because we already know that whatever it takes, the price of gold will keep increasing. So with this, it's a very simple and a trickish scenario. You just have to take a look at it at the initial price, where we used to buy dollar at 17, but today we buy dollar at 10. So let's assume that you are buying dollar at 10, where you be investing your money in gold, but you have it at the back of your mind that at every point in time the price of gold increases. So with this particular increment, you tend to consolidate the money in terms it failed to stabilize and further decline. So if our dollar price further decline, then you tend to know that okay, with the appreciation of the gold price, you can use it to make up with the money that you have. But when the Ghana cedis fail and it tends to depreciate and go back to its original price as in 17 Ghana cedis, you tend to know that okay, already I'm making 700 Ghana cedis with this particular appreciation, and also I'm making some gains from the increment of gold price. Now let's move to the third part of the video, where we'll be talking about how to buy or how to invest in gold. Now I want us to look at two ways in which we'll be able to buy or invest our money in gold. The first one we'll be looking at is investing in physical gold. So if you are in Ghana, there are two ways in investing in physical gold. The first one is buying gold or physical gold from licensed dealers. So if you have your money, you can turn out to go to licensed dealers or dealing companies, or here lies the case now everything has been operationalized to Gold Board. You can go to Gold Board and buy physical gold from them. But remember, whenever you are buying gold, you need to be very conscious, because gold is one of the valuable assets and they can sell any fake thing to you. And another way of holding physical gold is buying the Bank of Ghana gold coin. And the Bank of Ghana gold coin, they have so much denominations. If you want to buy the full coin, half coin or quarter coin, you can buy it from the Bank of Ghana, and it's one of the safest way of holding physical gold. If you buy it and you tend to know that okay, your place is not that safe, you can give it to a commercial bank and pay some token for them to hold it for you safely. And another way of investing in gold is not being physical, and not being physical tends to be two ways. And one of the ways is investing in either the ETFs of gold or investing in mutual funds of gold. So now we have a whole lot of ETFs where you'll be able to invest your money, as in holding or investing in gold or holding in gold. I'm hoping a whole lot of you already know what ETFs is. So without me going much into ETFs, we have several examples where you'll be able to buy ETFs in the US stocks exchange market. Example of ETFs you can invest your money is, we have the Granite Shares Trust. We also have the SPDR Gold Mine. We also have Gold Trust. So such are examples of ETFs that you can buy. One other way you can also invest in gold by not being physical is buying stocks or buying shares of gold mining companies. But this one, it tends to head to the productivity or the growth of these particular companies. So in case you buy a stock of a gold mining company where their value or their net assets increases and the share price also increases, then you tend to make so much gains in it. So if you actually want me to make a video on how to buy or invest in gold, either the Bank of Ghana gold coin or physical gold, or buying ETFs or purchasing stocks of gold mining companies, kindly let me know in the comment section. I hope this video helps. and I hope to see you investing your money in order to retain the value of your Ghana cedis, even when the Ghana cedis tend to depreciate against the US dollar or tends to appreciate further against the US dollar. Thank you very much for watching, and I see you in my next video.